Hi everyone, this is Ali Hussein Kasim of Ali Talks Tech. In this week's weekly roundup of tech news across Africa and the world, I have some super interesting conversations to have. The first is Kenya finally publishes the Kenya Virtual Asset Service Providers Bill. In other words, let's just call it the Kenya Crypto Bill, and we'll come back to it. And as I cover this bill, I'm also going to talk a bit about a super interesting white paper on what is known as a regulated blockchain. For those hardcore crypto guys who'll be like, what the hell is this guy talking about? There's nothing like a regulated blockchain. I'll come back to that. Then I'll cover a bit on India's venture capital boom and what we can learn in Africa from that boom. We'll then speak to the dismantling or potential dismantling of globalization by, wait for it, the country that is most responsible for globalization. I'm talking about Trump's United States of America. Last week, some of the big tech giants lost close to $2 trillion in value because of Trump's tariffs. Then I'll cover Stripe's banking charter approval by the state of Georgia. And we'll discuss how banks want to be fintechs, fintechs want to be banks, and so on and so forth. So back to Kenya's crypto bill. A couple of days ago, an MP in Kenya's parliament tabled the Virtual Asset Service Providers Bill. For ease of use, let's just call it Kenya's crypto bill. What are the key aspects or key areas that this bill is covering? First, obviously, there's the regulatory oversight. However, I think there is a bit of an issue here that this bill probably needs to, or the lawmakers need to look into, is that this bill doesn't seem to have a primary regulator. It has designated the Central Bank of Kenya and the Capital Markets Authority with sort of shared responsibility on licensing. This will create some potential overlaps. It will create problems in terms of who licenses what and so on, how many licenses we would need. So I think we need to look at harmonizing this particular aspect. Then the bill also speaks around licensing limits. Only corporate entities, corporate bodies can apply. Individuals, stay out, guys. Consumer protection is a key issue in this bill. Very strong safeguards, including segregation of customer assets, data protection, and a ban on anonymity tools like mixers. Interesting. And we'll come to that regulated blockchain that we discussed. Then, of course, you have AML and CFT compliance. AML for the uninitiated means anti-money laundering. CFT is terrorism financing, to ensure that there are no terrorists who are using the financial services ecosystem to finance their activities. Then last but not least, we're talking about ranging between 3 to 25 million fines for non-compliance. What I then did is I looked at what are some of the other countries doing in this space. And I've picked Nigeria and South Africa specifically because Nigeria and South Africa are part of what we call the big four in fintech in Africa. So the big four is Kenya, Nigeria, South Africa, and Egypt. Egypt doesn't have much when it comes to crypto bills yet. So I just zeroed in on Kenya, Nigeria, and South Africa. So Kenya's very strong focus on compliance and consumer protection, but restrictive on corporates only. Those are the key takeaways when we look at the three different countries. Nigeria is regulated under the Securities and Exchange Commission, so there is clarity in terms of who is the primary regulator. It also allows foreign virtual asset service providers via reciprocal deals, or what in fintech we call passporting deals, where when you have a license in another country and your regulator has confirmed that you are actually operating in that country, they would just simply tell you, okay, you don't need to go through the normal process from scratch. Let's engage with your regulator. Let's see where the gaps are. And then, so basically, we're talking about fast tracking already regulated virtual asset service providers from other countries. This is something that Kenya may want to look at and include into that bill. And I can promise you that as an association, the Association of Fintechs in Kenya and the Kenya Fintech Alliance, we will definitely be looking at putting in our submissions with the lawmakers. Last but not least, South Africa has classified crypto as financial products under the FSCA with phased regulation and the travel rule effective April 2025. What are the key takeaways from Kenya's framework? First, I think this framework is solid. It's a very good place to start, especially considering the fact that we're very late in the game. For a country that gave M-Pesa to the world, this is something that we should have laid way, way in advance. But you know what, guys? Better late than never. And globally aligned, but could improve. Area 1, adopting Nigeria's reciprocal VASP approach. 2, emulating South Africa's phased rollout. And 3, reconsidering exclusion of individuals to support local innovation. That's it as far as Kenya's crypto bill is concerned. Now, let's look at India's VC boom and what Africa can learn. India's startup ecosystem roared back in 2024 with 13.7 billion in VC funding. That's 40% growth over 2023. Key sectors like consumer tech, SaaS, and fintech have led the charge, making up over 60% of total investments. What are the key insights from this report from Bain & Company? Consumer tech is roaring, 5.4 billion raised, which is 2.3 times more than the year before, which has led by quick commerce, companies like Zepto, EdTech, Physics Wala, interesting name, Dukawala anyone, and travel tech, Rapido. Then there is software as a service, and software itself grew by about 20% to 1.7 billion, with generative AI funding up 1.5%. Everywhere we turn, guys, we don't seem to be able to get away from this AI thing. Then there are traditional sectors in banking, financial services, and insurance. Consumer and retail also attracted major funding. Interesting impact, huge impact, 4 to 5% of GDP from the startup sector in India. What are the lessons for Africa? Sector focus. We need to go beyond fintech, and I see that we have already started doing that. Climate tech is becoming big, prioritizing health tech, agri-tech, and clean energy. That is crucial. Profitability over hype. And guys, if you follow me if you've known me over the years, I have continuously rapped on this issue. P2P is crucial for the tech ecosystem. And guys, I don't mean peer-to-peer. I mean path to profitability. The days of just talking about band rates, how many people have uploaded your app, how many downloads and stuff. Those are vanity metrics, guys. Let's go to the meat of the issues now. Customer acquisition costs, monthly revenue, monthly recurring revenue, annual recurring revenue. How many clients are you losing? How many are you keeping and why are you keeping them, and so on and so forth. Last but not least, guys, second last but not least, regulatory reform. Pro-startup policies are very crucial. I know a number of countries in West Africa, Senegal started this, Nigeria has one, Kenya, I know we have a startup bill. Not sure how engaged the ecosystem has been as far as this is concerned, or is it that politicians think they know more than the ecosystem? Last but not least, collaboration and resilience. We need to continuously build strong networks and adapt to infrastructure and currency challenges. Final thought, guys. India's VC playbook shows that with the right mix of sector focus, policy, and resilience, we can unlock a powerful tech-driven future. Now we move to globalization. Are we seeing a major turnaround from the US? Of course, Trump has made it very clear. Make America great again, MAGA, and to hell with everybody else. As if America is living on an island and their prosperity has not been a global prosperity. So let's look at what is driving this. We are talking about Trump unleashing tariffs like it's confetti. Some people, there are pros and cons of this. There are people who are saying this is reciprocal. These countries have, but I think these guys are going overboard. I understand there is an island that only has animals in it that have been slammed with a 20% tariff. I'm not joking. Fact. You can fact check that. So I think the Trump administration has made its point. Now let the grown-ups come back to the table and let the world have some serious conversation, because these guys are throwing everything out of the window. The World Trade Organization as we know it is as dead as a dodo. So how far do you think Trump is going to go? What are the risks? Global trade is going to collapse. Consumer prices are going to just go off the roof. Global economies are starting to feel recessionary pressures. How is it going to affect us in Africa? Are we also going to say, you know what, to hell with the world? Let's focus on Africa. And it's not necessarily a bad thing. The only problem is that Africa is not one country. It's 54 different countries. And the African Union is far from a union, with all due respect to everybody. Now, let's look at Stripe's banking charter. Stripe is one of the largest, if not the largest, fintech in the world. And I mean pure play fintech. These guys have written the rule book, the gold or the platinum standard when it comes to fintech, when it comes to APIs. These guys have a 6-line code for connections across the world. They have layered on top of their payment platform many other interesting products, including if you are a small company and you want to set up in the US to get some of the benefits of setting up in a jurisdiction like Delaware, for example. Just go onto their Atlas platform and you are plugged in, almost plug and play. So what these guys have done, they said, we want a banking charter because one of the most interesting things is that we want to connect directly to some of the major payment players in the world. Who are these major payment players? We're talking about Visa and MasterCard, and the Chinese play called UnionPay. Guys, we can't ignore the Chinese again anymore. Whether we want it or not, they're at the table. Whether they are visible or invisible, they're still at the table. So what Stripe is saying is that, you know what, guys? This current situation where for us to connect to a bank, we have to these big payment players, we have to go through a bank. Saying, no, we want to go directly. And for us to be able to do that, we need a banking license. We are going to get a banking license. So they have more or less gotten a banking license from Georgia's banking regulator. Now, fun fact, when it comes to financial services regulation in the US, it's not one country, guys. Yeah, shock on me. I discovered that a couple of years ago when I was taking a course on fintech regulation. Every state in the US will need to give you a banking license for you to operate in that state. As a fintech, as a mobile operator, as a mobile money operator, as a remittance player, you have to have a license in every state. So what Stripe has said is, we want that license. Georgia has said, come, baby, come. You have that license. Who wins? Number one, Stripe gains more control, lower costs, and faster payouts. Obviously, it will strengthen their edge. They don't need any other bank now. They are a bank. Merchants will benefit, hopefully, from quicker settlements and reduced fees. And knowing how these guys operate, you can almost take that to the bank, no pun intended. Fintechs, inspired by Stripe and Fiserv, because Stripe is not the first one, others may pursue similar charters, boosting innovation. For African fintechs, I hope you're listening. Who are potential losers? Traditional banks could lose relevance in merchant acquiring. Legacy processors risk disintermediation as fintechs streamline operations. And small fintechs might struggle with the capital and compliance demands of these banking licenses. What this means is potentially we are going to be seeing an industry shakeup. Direct access to networks could redefine payment infrastructure, not just in the US, but worldwide. Rising competition and regulatory hurdles, obviously, this will continue to be felt. Now, I go to my last point, which I need to sort of bring together with Kenya's crypto bill. Obi, the CEO of Zone Payment Network, did a very, in my opinion, an interesting white paper a couple of days ago called the regulated blockchain. So what is a regulated blockchain? And is it even possible? Because remember, guys, the whole concept of crypto and blockchain is that it is unregulated. Here's a fact, guys. In the fintech ecosystem, we seem to have forgotten the fin in the fintech and seem to focus only on the tech. Fact number one, financial services is one of the most regulated industries anywhere in the world, and Africa, Kenya, Uganda, Tanzania, Rwanda, Burundi is not any exception. So to think that the wild, wild west days of the crypto ecosystem will continue is to continuously be dreaming even after morning has arisen. The fact of the matter is that Obi is putting on the table a super interesting proposition. So what's the pitch? Simple. A regulated blockchain brings to the table the best of both worlds. efficiency and transparency, automate compliance through code. This is interesting. And I'm hoping that policymakers and regulators are listening in and are going to start asking the right questions. How do you regulate through code? Obi, over to you. Consumer protection is crucial. As we can see, like any other industry, there are many scammers in the crypto ecosystem. Institutional trust. Up to today, decentralized finance is sort of a periphery play. If the whole ecosystem is brought into a regulated aspect, we are going to possibly see some major institutional players getting into decentralized finance. Why is this important for Africa? Leapfrogging legacy systems. Remember mobile money, how we leapfrogged the whole world? And I think this is potentially super important. It will also attract more investment in the crypto ecosystem because there is a perceived sort of security in this play. So my final thought, regulated blockchains could help Africa build a faster, safer, and more inclusive financial ecosystem. One that balances innovation and oversight. That's it for this week, guys. Looking forward to seeing you guys next week again. Asanteni sana.